Hey everyone, me Kevin here. I just sold a few $1,000,000 in stocks, and I want to talk about why and what I sold. But I'm going to start with why, because I think the why is extremely important. Folks, the stock market is going bonkers. I absolutely love it. It's beautiful seeing my portfolio go to the moon like every day. Y'all know that the vast majority of my positions, the vast majority of my money is tied up into tech and innovative stocks, and they are crushing it. I'm over 50% exposed to Tesla, which is up over 50% in 30 days. It's insane. That position is nuts. I have over 12,000 shares of Tesla and another $2 million in exposure to options, and it is ridiculous. I've got an insane amount of exposure to Enphase, about 1.8 million, about another 1.5 million to Affirm, another 1.5 million to Etsy. Combined with Apple, Amazon, Google, those are somewhere around 1.5 to, actually those are probably closer to like $2.1 million. But anyway, the point is I've got lots of exposure to stocks that overall together have been doing extremely well. This is all within the last 30 days, because if you look back at different parts of the year, things weren't that great. Like, this isn't like, oh wow, look, I'm like, everything's so brilliant here. This is the end of the year rally. We've kind of been planning on the entire year happening, and it's finally happening. That is, when I throw money into tech and Matterport or these other companies, where all of a sudden we're like, wow, these companies are selling off. They haven't caught up with the rally yet. They haven't moved yet. They're now moving like crazy, and it's very, very exciting. Even Lemonade was up a good chunk today, and that one's been in the crapper. But now I'm selling, and I've sold over the past couple weeks, probably somewhere in the neighborhood of $3 million to $4 million worth of stocks and options, various different things. And I'll go through, and even crypto, and I'll go through some of the things that I sold. But again, first, why? Why? Well, folks, I believe in the Warren Buffett quote that nobody wants to hear when times are good. Remember that quote that everybody only tells you when the market is bad? Be fearful when other people are greedy, and be greedy when other people are fearful, right? I get scared when stocks are doing this. I don't like it. And I don't like being on margin during these times. Now, don't get me wrong. I think this rally has legs. I don't think we had a lot of negative catalysts. I believe that inflation will be transitory eventually. I believe that at some point next year, we're going to see deflation in a lot of parts of our consumer sector. We're not going to see it in wages and rents. I think that's still going to bump up. But the drop in prices on things like commodities and consumer goods is going to weigh down the headline inflation reading. It's not going to be as scary, and it's going to take pricing power away from wage setters like unions. In other words, I think that's also going to soften wage pressures when other prices start going down. But that'll be closer towards the end of next year. I'm not worried about the taper or rate increases. Quite frankly, I think the market has priced in the anticipation of this. Joe Biden's not getting his tax rate increase on corporations, at least that's what it looks like now. And Joe Manchin keeps anchoring down Joe Biden's plan, which has actually been, so far, received as bullish for the stock market. Sure, we have jobs data coming out on Friday, the taper announcement coming out this week from the Fed. Sure, at the end of the year, in December, we're going to have to deal with the debt ceiling again and the budget for the government and government shutdown and all this crap again. Fine. But these catalysts aren't actually that big of a deal to me. And so I think that the market could continue to rally in a pretty positive way. But why am I selling then? Like, why would you sell if you think the rally's going to keep going? Well, that's because I'd rather secure profits when I'm in margin and pay off my margin than sit around like a dummy while I'm in debt. That is, I have margin and things are doing very well, and I'm not using some of what the market is gifting me because I'm not owed it. The market is gifting me that, right? Of course, as an investor, I like to say that's what I would expect to receive when I invest, that I expect to be right. You hope to be right? You expect to be right. Of course, you're not always going to be right. And you take profits, right? And you make money. But I'm not owed that, right? So I'm not going to be greedy and just wait for everything to go to the absolute moon. I'm going to take some profits. I'm going to pay down my margin. Remember, I went about $4 million in margin in October. That was the first week of October and the last 3 weeks of September because I bought like crazy. I bought an insane amount of stocks. I had a bunch of money sitting on the side in cash, somewhere around $4 million sitting in the side in cash, $4 to $5 million in cash. And then I had a tax bill, which some of that went to margin, but I also plowed a ton of money into the stock market, which has been really, really good. Because the things that I was buying, like Enphase around 150, options on Tesla at the beginning of October, oh my gosh, Affirm, Etsy, Enphase, Matterport, for goodness sakes, even SoFi, these things have been doing really, really, really well. Even EXPI real estate, it's insane. Some of these stocks have just done extremely well and performed extremely well. And so it's important for me to see, okay, I don't know what's coming. I don't know what the next negative catalyst is, but I think it's only going to take a little bit of shifty wind, one new crazy default of a large company in China, one new weird thing that falls over and does weird. The market's going to get antsy again. People are going to take profits again. The market's going to move so darn fast. We're going to end up having 3-4 red days in a row, and all of a sudden everything's going to be down 10, 15%. At least the higher valuation tech companies, not necessarily the indices. I don't know that we're going to see the indices correct more than 5% again this year. I just don't see that happening. It could, and then I'm going to be like, dang it, why didn't I get out of margin so I could go buy the dip, right? Like, people keep asking me, Kevin, should I buy Tesla now? And personally, that goes completely against my psychology. When the stock does this, I'm not going to go get on that train so freaking late, because it always comes back down. Now, the question is it going to run to $2,000 first and then come down to $1,700? And then I'm going to go, haha, buying the dip. Well, I could have bought it at $1,200, right? Maybe that could happen, but I'm willing to sacrifice that potential, $500 gain right there in that example, right? I'm willing to sacrifice that for making sure I stay true to my principles. And that's when the market's doing extremely well, I pay off debt and I prepare. I hoard cash. I get ready. I get ready for the fight again. I get ready for fear again. When people are like, you can't lose money in stocks. Look, retail is buying they're buying calls like crazy right now. Institutional investors are not as bullish as retail right now. Institutional investors might be lagging, but institutional investors are buying puts and they're protecting their portfolios. Retail investors are buying call options like crazy. They're way outpacing institutional investors right now with call options. They're buying calls like crazy because it's easy money. Anything you bought a call in at the end of September or beginning of October, printing. People are like, Kevin, why am I such a good investor? Look, all my call options are green. It's because the market's moving up. Well, when the market's moving up, that's when the seeds of destruction are sown, and you got to be prepared. Now, this is not me trying to be Mr. FUD. I am extremely long on this market. I have get this now, $27.5 million invested into stocks and crypto combined. It's insane. And I'm happy to say I'm down to $1.2 million in margin right now because I've sold a good amount of stuff at gains. And I'm very, very happy about that. That doesn't mean that everything's done perfectly. Like, I'm still holding some bags on things like Pinterest. In fact, I'm going to make a video on some of the bags that I've had this year that are just like, they can't become unbags. But we'll talk about that in a different video. But what did I sell? I sold most of my Coinbase calls. I sold my ChargePoint call. All these profitably. I sold actually a good chunk of my EXPI. I still have EXPI. I sold my SoFi. Sold 1,000 shares of Enphase, 1,000 shares of Affirm. I've sold a good chunk of my Tesla call options. And now I am almost completely out of margin. I also did sell some crypto. I sold half of my Voyager digital position. I sold half of that today. $380,000 of Cardano, $120,000 of Ethereum, altcoin. I didn't sell any Bitcoin. Did sell about $240K of Matterport. Did close my DWAC short profitably, and sold some puts against Robinhood, which those did very well as volatility fell, even though the price has been kind of like poopy. Quick note on crypto. I do also still have fears that even though I am investing in companies in like private equity as well in cryptocurrencies, I am concerned that if inflation does inflect down substantially in 2022, we're going to see a potential correction in cryptocurrency prices. So I am reducing my exposure a little bit, but I'm keeping an eye on this and totally willing to trade in and out with about a third of my crypto portfolio. Just a heads up, but I did sell about a third of my crypto portfolio. But anyway, all this together here has been a lot of selling and raising cash. And again, the reason is I want margin at 0. As soon as margin is at 0, I'm going to be building that war chest again. More money, more money, more money. Build the war chest. Get ready. Build it up, build it up, build it up. I'll even refinance some real estate because I've got 1 property, hopefully in escrow tonight, 2 properties that I closed, cash. I'll be refinancing those. Those properties, I'll have that money in like January. And if we have a dip or pain time in January or February again, boom. You're going to see me buying like crazy, 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 crazy. Because that's what I do. I'm going to buy the dipper. That's just the way I operate. I love this market. I'm going to cheer it on. I want it to keep running because obviously I'm mostly long on this market. But I'm not going to be a dum-dum and be in debt. Because if you are in debt right now, you should be paying it off. Because if the market crashes, you're going to be freaking out about getting margin called. And you should be freaking out about how good of deals you got that you could be shopping for. So the times to prepare are sooner rather than later. Anyway, thank you so very much for watching this video. If you like my psychology, consider checking out the programs down below. It's worth noting that my courses on building your wealth are still available with the same coupon code that was supposed to expire Saturday, linked down below. The reason for that is one of my employees had to go on an emergency trip to Boston and everything got screwed, and they're back soon and we're raising the price tomorrow, so just a quick little note. Okay, thank you so much for watching and we'll see you in the next one. Bye.